This lesson is going to focus on the Forex market, which is the foreign exchange market. The foreign exchange, or Forex, F-O-R-E-X, which stands for foreign exchange, is the largest market in the world. Each day, currencies worth over $5 trillion are traded in the Forex market. When a currency is traded on the Forex market, it's priced in terms of another currency. So you're comparing one currency against another. So for example, let's say today we're going to work on looking at the US dollar being traded against the Chinese yuan. So the price of the US dollar will be reflected against its value in terms of how many yuan you can buy with one US dollar. The yuan will also be reflected against how many dollars you can buy with one yuan. So in the Forex market, when you're doing foreign exchange problems, you have to include two diagrams, one for the USD and one for the yuan. So let's get to it. Let's look at the diagrams. That's our focus on this lesson, is how to draw the diagrams correctly. So here we are, our Forex market on the whiteboard. Okay, so first we're going to talk about the US dollar. We're going to talk about the price of one currency in terms of another and how we're going to label that properly. So let's say we have, again, the US dollar and the yuan. We're going to draw two diagrams, and these are microeconomic diagrams of supply and demand. So again, we have our price here, we have our quantity here. We're going to choose the dollar and the yuan, so we're going to say 1 yuan in terms of USD. That is a proper way to label the diagram. So yuan in terms of USD, and here we have the quantity of USD being traded. So here we're saying, what is the price of USD in terms of 1 yuan? Okay, so we have our supply of USD and our demand for USD. Make sure you label that properly. This must coordinate with the bottom currency here. And at our intersection, we know the intersection is the price that a good is going to trade at. At this intersection, we have our exchange rate, which is labeled ER, and our quantity of USD being traded in this market. Okay, we're just setting up these diagrams. Nothing's happening here yet. Okay, now let's go to our yuan diagram. So over here we have our USD in terms of yuan, and our quantity of yuan. Okay, so we have our two diagrams. We have our supply of yuan. And remember, these diagrams in economics is all about communication information to people. So the clearer you are in your communication, the more people are going to understand what you're trying to tell them, as well as the readers in the AP exam are going to understand what you're trying to tell them, the knowledge that you know. So here we have the demand of our yuan, and the intersection, once again, is the quantity and the price, which is the exchange rate. So here we have set up two diagrams, one for the USD, one for the yuan. Again, you can see yuan, yuan. The bottom currency here matches the quantity currency here. The bottom currency here matches the currency here. Okay, so we're going to do a simple change in the diagram. So we're going to say that the demand for yuan from Americans is going to increase. Let's just say Americans decide that they want to buy a lot more, Chinese goods, and so they need yuan to buy those goods. Americans will sell their USD in the foreign exchange market in order to buy yuan. So if the demand for yuan increases, let's draw that first. We're going to draw D, D1, increase. There, our yuan increased in demand. What happened to its value? First of all, more were bought, and the exchange rate labeled ER1 increased. So increase in demand in yuan led to an increase in the exchange rate, which means that it takes more dollars now to buy 1 yuan. Okay, what about the USD? Americans had to sell the USD in the foreign exchange market, so the supply of USD increased in the market. So we're going to draw that. S1 increase. What happened? Okay, increase in quantity, exchange rate decreased. So the value of the price of the yuan increased, the price of the USD decreased. This is called appreciation. So the yuan appreciated and the US dollar depreciated against the yuan in the foreign exchange market. So this is how you draw the two diagrams showing a change in the value of one currency against another. The important points when you're drawing these diagrams is number one, this and this match. This and this match. So the bottom currency and the quantity currency. The bottom currency and the quantity currency. Here's the other tip. The diagrams are going to move. The shift one currency is going to have a change in demand, as we did here. This one had an increase, but it could be a decrease. The other one is going to have a change in the supply. As one changes demand, the other one changes supply. They move in the same direction. We had an increase in demand here. We had an increase in supply here. If demand decreases, supply decreases. Okay, they're going to move in the same direction. One will have a demand change. One will have a supply change. You will never have both currencies with a demand change and both currencies with a supply change. So those are the hot tips for the Forex market. That's how to draw the diagrams. And now we're going to practice some work on that. Okay, thanks.